I think we're ready to go. Is that correct?
Take it away, Ian.
All right, thanks very much. Sorry, just the technicals. Welcome, everyone. Sorry for the slight delay. There's a few people joining us later. My name's Ian Williams. I am your Master of Ceremonies today. So welcome, everyone. I just wanted to let everyone know this webinar is being recorded. If you feel uncomfortable about that, if you could let us know. There's a Q&A function. We're hoping to have about 15 minutes Q&A at the end of the session. At the bottom of your screen, you'll see there's a chat function, and that comes up live to each of the speakers. Firstly, I'd like to just quickly introduce our speakers. Firstly, Damien Roberts, partner at Herbert Smith Freehills, Dr. Shiro Armstrong, professor at the Australian National University and head of the Australia-Japan Research Centre. We've got Elizabeth Cox, General Manager for North Asia for Austrade, and a special guest today, President Kataoka of JETRO. So without further delay, just a quick summary to get us going. Look, 2023 was a fantastic year, a record number of mergers and acquisitions, transactions. It was not just the number of the transactions, but the fact that it was new energy, traditional energy, and as we'll find out from our speakers today, the diversity of the new sectors that investment is finding its way to is fascinating. Japanese foreign direct investment on a cumulative basis reached a record of 133.8 million. That is actually as at 31 December 2022. The newest figures will come out shortly, and we're expecting quite a jump in cumulative investment. Two-way trade, again, a record after it had been up 75% 2 years ago, and increased a further 24% last year. And Japan is behind China as clearly our second largest trade partner, both on an export and a two-way basis. What also is interesting is just the year-by-year increasing level of bilateral cooperation in a more uncertain world by the day. It's drawing Australia and Japan even closer together, and you'll see in the report there's quite a detailed schedule of the meetings, both political and between the mutual bureaucracies. So without any further ado, I'd like to introduce Damien and ask him to start the presentation.
Thanks, Ian. I'm hoping everyone can hear me okay. And at the outset, please just let me take a moment to acknowledge the incredible amount of hard work and thought that I know that you and Shiro and your respective teams have put into preparing the annual report again this year. So thank you very much. As we've already seen through the press and otherwise, it really is a seminal piece, and will help guide the work that everyone around this webinar and across the Australia-Japan corridor is trying to do in this space. I'm going to take the themes that you just mentioned and talk about them in a little bit of detail. And I think the obvious place to start is the high level of M&A activity that we had, notwithstanding the fact that globally numbers slipped a little bit. Japanese investment into Australia increased from the previous year of 2022. And as we had in the report there, I think it was a record number of 53 M&A transactions, as well as, pleasingly, 38 new partnerships as well. And if you look at how that breaks down, it's in the report so people can see, but it's interesting to take a moment to look at it because there were 44 acquisitions and 9 divestments. So there's a bit of selling going on. It's not all just buying, a bit of recycling. There were 13 acquisitions in the real estate space. And that's one of the trends that is pulled out in quite some detail in the report, given the overall volumes that we're seeing. 11 transactions in consumer in the retail sector, which is also one of the key themes that I know we focused on. 10 transactions in mining. So that included critical and strategic minerals, but also traditional energy like LNG and coal. And I think there were 9 transactions we saw in sort of the IT space, the software, digital engineering, biotech, etc. 6 in renewables and decarbonisation, and then is it 4 that were left in the sort of a mix of financial services, agribusiness, industrial sector, etc. And I think there's a really good story and some few trends in that one, but also one of the pleasing things was the fact that of those 53 deals, 12 of them were actually all new entrants to the Australian market. That's almost a quarter of all deals. And most of those were actually in the real estate space. And that's a particular area of interest, and one that I think our annual report has been pulling out since 2020, actually. That's when we first started to focus on things like the real estate transactions in the commercial space, offices, residential, car parking, and not just existing assets, but also development opportunities. So in the real estate space in particular, I think a number of years ago, we saw the likes of Mitsubishi Estate and Sekisui House coming through. Shortly after that, we saw the likes of Mitsui Fudosan, Sumitomo Forestry, Daiwa House, Misawa Homes. And then once you've got some of the big players in there, it just makes it a bit easier for the others to follow. And now we're seeing new market entrants, including the likes of power utilities, their real estate arms, and railway operators. And the operators in particular using expertise that they have in developing sites around train stations to support integration of commercial, residential developments with transport solutions. And as everyone knows, in Japan, they do that very well here. So real estate was one of the top 10 trends. I think the other ones we had there were innovation, consumer, decarbonisation, hydrogen/ammonia, LNG/coal, minerals, life insurance and financial products, financing, and then, of course, infrastructure as well. So those were the top 10. And I know that there are 3 other emerging trends that followed as well. Just want to touch on some of those trends while I've got a few minutes here. In particular, some were related. Decarbonisation, hydrogen, ammonia, LNG, coal, minerals, all part of the old and the new energy story that is told in the report. And much has been said about those generally in the context of the energy transition. But I think it was interesting to note that not only do these investments underpin developments in technology that will be needed to get us through to net zero carbon neutrality, it's also an opportunity for Japanese and Australian parties to work together more closely than ever at a project level. And that in turn, I think, is leading to a more, I guess, people-intensive era in the bilateral relationship. The close bilateral ties that have been built, I guess, over decades now, allowing Australia and Japan to collaborate much more closely, which is obviously a great thing. At the same time, Japanese equipment manufacturers and suppliers built their businesses supplying traditional energy projects and now looking for opportunities to supply decarbonisation projects. And many of those projects have local content requirements. So those suppliers are in turn looking to partner with local Australian businesses who can manufacture under license or develop their own facilities in Australia. And that then, of course, continues to drive the investment trend, and no doubt will continue to do so. I think one of the other big changes that we're seeing coming through these reports is that Japanese companies starting to see Australia not just as an investment destination for securing goods or supply, but also a destination in itself. And that's particularly the case in the consumer and financial services offerings. I think even in some cases, innovation, logistics, etc., using those opportunities as almost a springboard into bigger business platforms in the APAC region. So in that consumer space in particular, although there's a growing recognition that cost of living, cost of labour is high in Australia, and it is, I guess there are also high margins in the retail sector where Australians are showing less sensitivity to price increases. And then when you combine that with population that's growing thanks to net positive immigration, political stability, similar time zones, English speaking, rule of law, all those things that we know so well, the reasons become a whole lot more obvious, and especially, and everyone on this webinar knows well, the demographic situation that Japan is facing. Of the newer trend, I think it was particularly interesting to see diversification that was coming through in the consumer sector. We saw some major B2C acquisitions, Kieran's takeover of Blackmores, the 7&i Holdings acquisition of 7-Eleven Australia, Carl's acquisition of that skincare company, Bondi Sands, all demonstrating the attractiveness of the Australian domestic consumer market. And in the technology sector, we saw further acquisitions of IT biotech companies by the likes of Fujifilm, Otsuka Pharmaceutical, Fujitsu, Hitachi, SoftBank Robotics. I think in this case in particular, innovation really started to come to the fore for these Japanese corporates as they look to secure what is quite unique technologies to help them scale up for global application. And in terms of investment patterns, the research in the report showed that the three paradigms that our report previously introduced were all still relevant. The first, minority investments, particularly mineral, energy, food, continue to be a way of securing access to supply. Or if that's new energy, then it's securing information, data, technology opportunities. Secondly, we've seen, I guess, in the last 10 to 15 years, Japanese companies taking majority or even 100% acquisitions to help their growth story. And I think some of the notable examples of those in 2023 were acquisitions of businesses that were, I guess, in the relevant supply chains or even in adjacent markets to help with business expansions. And then the third of those, which was the pleasing one, was a continued, I guess, explosion in partnerships. Many of them, of course, related to the newer sectors, and both countries are keen to understand what the opportunities are and understand the markets that are developing around them. And consequently, I think many of them therefore did relate to new energy, real estate, urban development, innovation, etc. And I guess actually it's the innovation, this last one, that I think probably caught many investors by surprise. At last count, I think there were at least, or maybe more than 10 unicorns in Australia. And we're certainly establishing ourselves as one of the top innovation centres in the world now. And a big contributor to that seems to be, I guess, the CSIRO's long history of advanced research and development. And the major difference, I guess, when compared with Japan, is that the research is being undertaken by the CSIRO and university research centres, whilst in Japan, this has often fallen to the corporates to pursue. So, and I guess as part of that innovation trend, we start to see those corporates coming through and contributing to and tying up with the universities. So in 2023, that included the likes of NTT, Nippon Steel, Fujitsu, IDOM, NEC were the ones I think mentioned in the report, and a few others. But starting to tie up with universities and really starting to try and commercialize these emerging technologies. So I'll probably well and truly use my 10 minutes, but I did just want to say that, I guess in conclusion, it's fair to say that many of these M&A trends we're seeing are actually positive for Japanese buyers. Companies are increasingly seen as good long-term investors, the Japanese. Sale processes are a bit more aligned now with the internal ringi decision-making processes that guide many Japanese companies, and the strength of the Japan and Australia relationship is again really supportive of bilateral investments. And Ian, I think it's those relationships that Shira is going to talk to and dissect in a little bit of detail for us. So I'll hand over to him.
All right. Over to you, Dr. Professor Armstrong.
Thank you very much, Ian, and thank you, Damien. Let me just start by thanking everyone for tuning in, but thanks to the HSF team for inviting us in, the ANU, into this really important process, annual publication. So this is the seventh, and our team had a lot of fun contributing to this. So my job for this next 10 minutes is to take a step back, I think, and look at the broader Australia-Japan relationship, the context. I want to talk a little bit about the energy relationship, the energy trade, and then talk a little bit about some of the data in the report. So let me start by talking about the closeness. Doesn't need to be said for this audience especially, but it is really interesting just reflecting on how economically, politically, and strategically close Australia and Japan are. In fact, I don't think we've ever been closer, and that's often said, and it's often said because it's quite obvious. But that political and strategic alignment between Tokyo and Canberra, it's built on this large economic relationship, the trade and investment. And that's a strategically important relationship, as I'll come back to when I talk about the energy. It's also built on the people-to-people ties and a shared interest in an open, rules-based order. Now, that order is on a trajectory towards disorder, and global uncertainty is continuing to worsen this year. And so that's an important context for thinking about the Australia-Japan relationship and understanding what needs to be done. And that affects the investment relationship as well, of course. So, of course, we have conflicts now internationally, two big conflicts. We have US-China strategic competition, markets closing up with protectionism on the rise in many of our economies and globally, and governments becoming more interventionist with new and large-scale industrial policies. And a lot of those are efforts to secure supply chains to affect the energy transition. Now, this is happening globally. Some of these measures more directly affect the Australia-Japan investment and economic relationship, and we've tried to highlight some of those in the report. But this economic, political, and strategic context, international context, does mean that Australia and Japan have to cooperate more closely. It's more important to cooperate because Australia and Japan are not just price takers in the international system. Especially Japan, which is a much bigger and powerful economy in the G7, but working together, we have the ability to mobilize coalitions to protect our interests and to pursue and prosecute our interests globally. And of course, Australia and Japan are responsible for the creation of APEC. Both are in the group of 20. And of course, more closely in the region, Australia and Japan, especially with Japan's leadership helped conclude the CPTPP, the RCEP agreement as well, and are members of the Quad and working closely with partners to complete the Indo-Pacific Economic Framework. So that's a pretty important contribution and asset that Australia and Japan have been playing to build, and that's going to help us manage those uncertainties. But I think we all agree a lot more needs to be done. So just on the energy relationship then, because this is the key pillar of the economic relationship, it's important for us to recognise how indispensable Australia is for Japan's energy security. And that actually continues to grow. So now about 1/3 of Japan's energy needs are supplied by Australia. And as we say in the report, that's 8 hours of electricity generation in Japan a day. And that is really quite something. Australia is very lucky, and we've got energy self-sufficiency, as we cite in the report, of 340%, and compare that to Japan's energy self-sufficiency of 12% or 12.5%. So that's an important complementarity, but a very important responsibility on the Australian side too. But as many of us know, that energy trade is in coal, LNG, and uranium. And both economies have committed to net zero by 2050 and are in the process of transitioning our energy systems. And so we're seeing lots of investment in new energy, hydrogen, ammonia, and renewables. And we cover a lot of that in the report, but it does also emphasize the transition is going to be important with coal and LNG. So much more needs to be done in the bilateral relationship on the energy front to affect this transition. Coal and LNG accounted for 75% of Australia's exports to Japan last year, and that's obviously going to change. And that, of course, is driven by Japanese investment in the past in those sectors, and the new energy relationships driven by the investment in the new energy sectors. And I just want to acknowledge the AJBCC conference last week in Adelaide, a spectacular success, looking deeply at these issues, having government and business and academia involved. Finally, I just want to highlight some data points in the relationship that we highlight in the report. I think these were very interesting to me, and I hope people who pick up the report can skim through and have a look at some of the data points. Damien mentioned some already, but we do document the increasingly frequent interactions between our two prime ministers. We can't take that for granted. That really, the annual visits only started 10 years ago, and before that it was pretty rare to have a Japanese Prime Minister visit Australia, for example. But also we document the movement of cabinet ministers and business people, not just Australian tourists going up to Japan for skiing and snowboarding, but the huge flows of business people. And of course, the 60th annual joint business conference last year in Melbourne in October saw record attendance of over 650 delegates from 223 member organisations. And of course, at that conference, we had Japan's METI minister and 3 Australian cabinet ministers. Some other points worth highlighting, I thought, that I found interesting. Of course, 6 of the top 50 corporate taxpayers in Australia were Japanese companies last year. Japanese car makers, that's Toyota, Mazda, Mitsubishi, Subaru, and Isuzu, hold 5 of the top 10 spots in new car sales in Australia. And the top 3 selling trucks in Australia are all Japanese companies. And we're all well familiar that Asahi and Kirin sold 9 of the top 10 Australian beer brands. So Australian presence is, Japanese presence is on the ground here in Australia, including now 36 Uniqlo stores all across Australia, including in Canberra from last year. So that's great news for me, living in Canberra, of course. We looked at the different sources of Japanese foreign direct investment into Australia. I can acknowledge it's pretty confusing for a lot of people looking at the different sources. We looked at the Foreign Investment Review Board data, Australian Bureau of Statistics, JETRO, Bank of Japan, and Ministry of Finance, and they all tell a slightly different story. They may seem inconsistent, but we try to explain why they're not, and they do really tell a fuller picture of the story. Now, the headline numbers out of the Australian Bureau of Statistics show that the stock of Japanese foreign direct investment in Australia slipped behind the United Kingdom to be 3rd most important now, behind the United States and the United Kingdom, but it's neck and neck with the United Kingdom for Japan. And that latest Australian Bureau of Statistics data shows much less foreign investment in Australia than the other sources. And the other sources include this report last year and this year. And that doesn't look consistent with the JETRO or Ministry of Finance data. But in fact, what the ABS data is not picking up is what we highlight in the report, and a really important part of this investment relationship, growing part of the economic relationship, and that's the reinvested earnings and increased Japanese project financing in Australia. So the Japanese banks are playing a much larger role, but there's a lot of reinvested earnings. And so that's picked up in slightly different series in the Australian Bureau of Statistics. So hopefully we help in the report to demystify some of that and bring some of that together. So look, I might stop there and look forward to the Q&A and the other presentations. Thank you very much.
Thanks very much, Shira. I'm going to ask Liz Cox, who's the General Manager for North Asia at Austrade, to provide some comments from her perspective from Tokyo.
Thank you, Ian. Thanks for the great lead-in from Damien, Ian, and Shiro, and congratulations again, Ian and Shiro, for this fantastic report. I noticed a comment in the Q&A that a few of you haven't been able to access it yet. When you do, I just want to recommend a couple of pages to you. Page 8, there's the key themes page. One thing I like to do is actually look at that year on year, because we have 7 reports now, 7 years worth of reports to look back on. Just a really interesting exercise to go back and look at that page and see how the trends have slightly shifted over time. Also, as Shiro mentioned, there's the great data set on page 30 and other things. For lack of time, I won't mention my other highlights, but there's some of the pages I think are really worth checking out. But it is a great report. It highlights a number of things, including the strong resurgence of real estate as a core part of the investment relationship, the key role of Japanese banks in financing Australia's prosperity. It's a story that's not told enough, and I think the report did a good way of shining a spotlight on that. And also the role of JBIC. Ian, Damien and I were at a seminar at JBIC's offices yesterday, and it was just fantastic to see the focus on the bilateral relationship there. Now, I, as usual, have a slide presentation. So Christina, if you don't mind bringing that up, I'll try and get through it in 10 or 9 minutes. So as those of you who heard me speak before, you know I like to sort of theme my discussions around the 3 or 4 S's, depending on how many I have going. At the moment, it's absolutely squarely set on these 4: energy security, food security, traditional security or defence, and economic security. Next slide, please. So as I sit here on the ground in Tokyo, we've got the last of the sakura clinging to the trees outside. I just thought it's worth giving you a bit of a view from the Japanese side of what's driving decisions in the economy right now. And of course, it's been a very interesting year in the economy already. It's only April. So of course, we saw earlier this year, Germany overtake Japan as the third largest economy in the world. Whether that's a permanent change or not, time will tell. We've also seen the CPI rise to 3.2%, which is, of course, the biggest since 1982. And this is having an impact on the cost of living, of course. So we're seeing the restructuring of supply chains, labour costs, transportation costs, raw materials costs, all brought to bear on the businesses here in Japan. So that is, of course, having an impact, as is the yen, the weak yen, which, of course, is fantastic for those of us from Australia who are visiting, but is an impact certainly for Japanese companies. We've also had, of course, last month, Japan's latest step in its economic recovery with the Bank of Japan's decision to end negative interest rates and raise the benchmark for the first time in 17 years. We haven't seen any immediate effects from that decision, but as time goes on, it'll be interesting to watch if there's any effect on the yen and also private sector borrowing rates. Next slide, please. Thank you. Some of the key highlights in the trade investment relationship have been covered already. Of course, two-way trade. Japan is easily our second largest trading partner on two-way trade. Third ranked, the US, is at $95 billion, so quite a way ahead there. On the right-hand side of the slide, you can see there's more than 60 new decarbonisation projects or partnerships that have been announced in the past year. Decarbonisation is now a core part of the business activities of the businesses we work with. It's not an adjunct. This is absolutely driving investment decision-making here in Japan. And of course, FDI levels are growing, as has been mentioned already. Next slide, please. And as usual, very happy to share my slides after this presentation. I'll just dig into real estate a little bit because I thought this was a really interesting feature of the report and is something certainly in terms of the inquiries we're receiving here in Japan, a definite feature of the investment inquiries we're getting. So if you look at the data over the last 5 years, you can see that it's very much an inbound investment story here in Japan, but actually that's completely flipped in 2023. We've seen almost $7.5 billion in outward investment into overseas projects in real estate. The office sector continues to dominate, but we've seen a real rise in the number of build-to-rent projects, and you'll see this in the Australian media as well. There's been a number of high-profile deals signed. In terms of the Australian market, we've definitely been a beneficiary of this focus on real estate. So around $2 billion of capital invested in the last year, which is, if you look over the average amount invested over the last decade, a 9-fold increase. So we expect this trend to continue. Next slide, please. Innovation is another really bright spot in the bilateral relationship. And I won't say too much about this because I suspect Jetro might have some comments on the J-Bridge program, for example, but certainly there's a lot of interesting incentives available at the moment in Japan to spur startups' involvement in industries such as the green transformation and digital transformation. The Japanese government has made it very clear that they see startups as playing a key role in making the operations of large corporations more efficient. But it's not just for Japanese companies. And certainly if you look at the foot traffic that Austrade's looking after in terms of Australian companies looking for innovation opportunities, we've seen a lot of Australian companies access the new concierge systems and new subsidies that are available for them as well. We've also had another recent boost with the digital nomad visa, which is making it a bit easier for individuals or startups to come into Japan and have a look at the ecosystem before making any big investment decisions. Innovation has been really interesting from a prefectural point of view as well. We've seen TSMC, for example, take the technology accumulated around the semiconductor industry in Kumamoto and actually bring it to bear on new ecosystems in life sciences and also biotechnology. So some really interesting trends there. Next slide, please. Inbound tourism has been mentioned. It's worth mentioning because it's been an incredible year so far in terms of the number of Australians visiting Japan. So we had over 100,000 Australian visitors in January. I feel like 90,000 of those were with me in Hakuba and probably a few in Nozawa as well. But certainly we've been seeing a lot of Australians. That's not just tourists. We're seeing a lot of business people actually make trips up here in person. And where that used to be a once a year or once every couple of year trips, you're finding people coming for key meetings now just to catch catch up with their clients. So it's not just this pomp and circumstance meeting, it's actually the more regular cadence of meetings has started again. And I think that's so important for the bilateral business relationship. It's also great for people to people understanding and links. The more people that come here, the more they understand the opportunity Japan presents. Also had a great impact on tourism, on education as well. We've got 16,000 Japanese students currently studying in Australia, and the Japanese government has recently announced the J-Mirai program, which aims to increase the number of English language courses taught in high schools and universities, which is a great opportunity for Australian education institutions. Next slide, please. Onto decarbonisation. Previous speakers have covered it really well, but just to say that hydrogen and ammonia projects continue to attract strong interest from Japanese customers. I've got on the slide, it's a bit hard to read the detail, but just the top line is this. There's 100 projects around Australia in hydrogen. Over 30 of those have Japanese participation currently. So that's a great example of the strength of the trend. But it's not just hydrogen. We're also seeing interest in synthetic fuels such as methane, methanol as well, and across the renewable spectrum in areas such as solar, circular economy, waste to energy, and biofuels as well. I've seen a number of interesting transactions around those. Due to lack of time, won't go into each of them, but certainly some interesting trends. Critical and battery minerals, of course, another strong feature of the relationship at the moment, as well as interest in CCUS with a number of MOUs signed. Next slide, please. Food security, I won't touch on this for too long because it tends to be a trade priority for us. But as has been mentioned around self-sufficiency, Japan's food self-sufficiency rate is pretty steady at 38%. Like Energy Australia, also has a 300+% rate of self-sufficiency. So definitely some interest on the investment relationship in agri-tech opportunities, and also looking at Australia as a potential production base. We have seen through the year, though, some very interesting food security deals signed. So one great example is Kita Sanriku Factory, which is a northern Japan or Tohoku-based aquaculture company, investing into a Tasmanian fishery company to create a sustainable seafood supply chain between Japan and Australia. They're also looking at a sea urchin ranch, a series of farms around various Australian states on the eastern seaboard. So those fans of sea urchin in Australia who can't get their hands on any quality sea urchin, that might be about to change. Next slide, please. Defence, of course, critically important, and a lot of high-profile announcements recently, including the announcement of AUKUS Pillar 2, the Advanced Capability Pillar, and potential Japanese participation in that. Of course, the General Purpose Frigate Program, bilateral research collaboration on undersea warfare, and also Mitsubishi Electric's tie-up with the Australian government to develop laser technology. These are some of the landmark announcements we've seen in recent times. They'll take a while to play out. We're certainly getting a lot of inquiries from Japanese companies and also Australian companies in how they can be involved. Look forward to updating you in future presentations about this, but this is certainly now a core priority for me and my team. And it's not just these high-profile deals. We're also seeing a really steady stream of Australian companies seeking to access opportunities that are presented by the Japanese government's National Defence Plan, including technologies such as cyber, AI, unmanned systems, surveillance, and of course, space. Next slide, please. I have to finish up by talking about Expo. Last Saturday marked 1 year to go, April 13th, 2025. We kick off in Osaka. Australia has a Type A pavilion, or a fairly substantial pavilion. We will be there. We're going to have a fantastic business program for you all to participate in. And we had, as you can see on the screen, a groundbreaking ceremony on the 22nd of March. It was attended by over 150 key stakeholders in the Kansai region, business, government, and others. Of course, our ambassador, Ambassador Herbert, was there as well. You can't quite, I think you can see on the screen the representatives of the Queensland and South Australian governments. They are gold sponsors of our pavilion, so they were with us as well. It was great to be in the room and feel the excitement. There are, of course, a few challenges around Expo, but what we are really excited for the opportunity to showcase the best Australia has to offer, to showcase the strength of our relationship and arrange business events around some of the themes I've just been talking about. There still are partnership opportunities available, so I would encourage you, if you're interested, to reach out to the Department of Foreign Affairs Expo Task Force, and they'll be able to provide you with further information. Next slide, please. And my traditional plug for my team, if you're interested in discussing Australian export opportunities into Japan or inbound opportunities from Japan on the investment side into Australia, please don't hesitate to contact us. Thank you very much for your time. Go secho arigatou gozaimashita.
Thanks very much, Liz, and everyone should get in quickly to get one of those Expo 2025 mascots. Not quite as good as the ibis, which has been selected for the 2032 Brisbane Olympics. I'd like to throw to President Kataoka to give a perspective from the Japanese side.
So thank you, Ian, and thank you for this opportunity. I was also very much impressed by the quality of the report, which is very comprehensive with so many information on concrete examples of investment. There seems to be nothing to add from my side, but I did make comments on three aspects: Japanese FDI's trend and current situation of Japanese economy and the business potential in Australia for Japanese companies, already covered in the report or already referred by other panelists. So first of all, for the Japanese FDI trend, but before talking about the Japan, I'd like to make few comments on global investment trend. So according to the UNCTAD report, the global inward FDI in 2023, excluding the FDIs in regions such as Luxembourg or Netherlands, which has attracted high value investment, the global inward FDI in 2023 is estimated to be 80% lower than the previous year. Uncertainty in the global economy and higher interest rates seems to have had a negative impact on global inward FDI. But under these circumstances, Japanese outward investment has increased by 4% compared to the previous year. And surprisingly, as already said by many persons, investment in Australia increased around 40% over the previous year, accounting for around 9% of Japan's total outward FDI. And by country, the Australia comes to the second place after the US, where investment related to advanced manufacturing bases is increasing due to IRAs and other factors. On the other hand, a major factor for the increase in investment in Australia is exactly as noted in the report, due to more than 50 M&As realized. And also this is also referred in the report. The acquisition deal has expanded to retail and consumer goods, in addition to the conventional sector, which is an energy. But I'd like to emphasize on the fact that, as was said, the bilateral relationship has played a very important role for this increase of investment, and also Japanese companies' attitude. The decision-making process, which is said to be very slow, but especially for the sectors like green transition, mainly hydrogen or innovation, Japanese companies are very active in investing right now. So this is very, important trend right now. And the second point, as for the Japanese economy, which is on a gradual recovery path, the Russian invasion of Ukraine and the recovery from the corona disaster in the US and Europe have resulted in a global rise in prices. Prices in Japan have also begun to rise for the first time in 40 years. The economy is finally getting out of its long period of depression, although the population has been, suffering from the rising prices. Under these circumstances, the Kishida administration is accelerating its efforts to strengthen and expand the current positive trends, such as rising stock prices, the highest level of wage hike in 30 years, and also high investment motivation in the private sector. But Japan has been facing economic and social challenges, such as soaring prices of imported materials, resources in Japan, and the challenge of low birth rate, aging and declining population, and the situation in Ukraine, Middle East, climate change issues like that. Against this backdrop, Japanese companies are trying to increase their overseas activities, particularly in response to its shrinking domestic market. As pointed out in the report, Australia is a high-cost destination, including labor and procurement costs, but its high profitability is an important factor in attracting direct investment and M&As. the medium to long-term growth potential of the Australian economy due to population growth and rising incomes, as well as Australia's political economic stability in light of the recent geopolitical situation, are also reasons why Japanese companies have decided to expand into Australia today. This is clearly shown in the survey we conducted from Japanese companies already doing business, overseas businesses as well. And the third point for the business potential for Japanese companies in Australia, I have to mention, of course, about the energy transition sector, and especially the hydrogen. Japan's price difference support measures are currently being discussed in a diet, and if all goes well, a public call for application is expected to start in this summer. And if Japan's price difference support measures are finalized, in addition to Australia's Head Start support measures, investment projects for commercialization of hydrogen, which have been stuck in the demonstration stage, would finally move forward, I expect. And secondly, the innovation, as is already mentioned by so many panelists, we are paying very much attention to Australia's potential in this regard. And we organized a webinar on open innovation between Australia and Japan in last February. And we have more than 150 people, participants. And given that many Australian technology startups spin out from CSIRO and universities, we believe that connecting Japanese companies with universities and research institutions will create groundwork for increased CVC investment from Japan in the future. Incidentally, Nikkei reported last month that Japan currently stands out at the center of CVC activity. Among the top 10 ranking of CVC in terms of the number of investment for the fourth quarter of 2023, Japanese companies monopolize the top 3 positions. The report also notes that with heightened macroeconomic uncertainty, many CVCs are focusing their investment on companies that closely align with the parent company's overarching strategy rather than seeking financial returns. This means that Australia, with its growing number of deep tech companies, could see an increase in both direct and indirect investment if we succeed in promoting the advantages of an excellent ecosystem of Australia. And I'd like to mention especially the medtech sector in this regard, because Australia has a mutual recognition system with Europe and the US for this sector. Japanese companies, not only startups, but also big groups, are beginning to consider entering the Australian market as a landing pad for future expansion into European and US market. And Jadla Sydney, for the last, supporting open innovation Japanese startups entering the Australian market, we'll be very happy to explain this new trend as a concrete case study in our next event next year. Thank you very much.
Thank you very much, Kataoka-san. Well, this is surprising. There hasn't been one question asked. Normally, there's fortunately Bob Seidler's overseas, so he didn't ask an excruciatingly difficult question to me. So I just wondered if anyone would like to, while we're waiting for a question to come through, I might ask Liz, what did you particularly like about the report?
Yeah, absolutely. I liked it all, but I loved the appendices this time. I thought it was really good to have a list as a government employee of the different ministerial engagement and government engagement at the back of it. I think it does paint that picture, to Shiro's point, of how closely we are collaborating with Japan. The real estate section I thought was a real standout. I really enjoy the trends slide on page 8, the trends page on page 8. Because that's something I refer to through the year, and my team also uses as a resource. Just as a really quick and dirty way of remembering what all the key themes are in the bilateral business relationship.
All right, we've got a question in from. So it's how much of a focus are you seeing on fintech as a subset of innovation? I might ask Damien if you wouldn't mind responding.
Thanks, Ian. I suspect that you probably got even more information on than I do, but I think probably in terms of the fintech itself, I feel as though it's almost started before the innovation trend. Some of the investments we saw coming into that space was probably almost ahead of the innovation wave. Some of the investments that were trying to leverage some of the expertise that Japan had, some of those didn't go quite so well. But I think probably as we're looking at things like not just fintech, but biotech, AI, cloud-based solutions, that sort of thing, that will be part of the puzzle going forward. I don't know if you have any more sort of specific data than I do, but I know it's something we've been focusing on for a little while in some of the previous reports as well.
Yeah, well, look, I think probably that tie-up between MUFG and Artesian, you sort of see that focusing on the smaller fintech side, and then you see the large investments like MUTB, but MUFG Group acquiring Link for 1.2 billion, which is at the sort of big end of town for financial services. Let's see, another question. It's a smaller piece of the pie. Are you seeing any trends in Japanese FDI in Australian agriculture? Maybe ask Liz if she wouldn't mind responding.
Yeah, absolutely. I don't know if you have any data from an M&A perspective, but we're certainly seeing interest. If you're talking about inbound investment from Japan in agritech, for example, that's one sector where we do get a lot of inquiries. And I did mention that sustainable seafood example. I think we're increasingly seeing themes around that, food security being a theme, but also sustainability. We've just had here in Tokyo FoodX, which is Japan's largest food trade show. We had a record 131, I think, Australian companies exhibit across our Team Australia, so Australian federal and state pavilions. And a real theme around sustainably sourced produce, whether that be, sustainably caught fish or something powered by renewable energy, be it a chocolate bar or whiskey. There's a lot of interest in that as a thematic as well.
Yeah, I think what we did see also, Liz, was agri related to decarbonisation. So all sorts of, feed the cows, seafood, and variations on that.
Absolutely, seaweed being a key theme. Yeah, for sure.
Yeah, terrific. A question about FIRB. I might throw to Damien. Are you seeing any impediments on Japanese companies in investing in Australia, Damien?
FIRB, I think probably we get this question very regularly. And we normally start by saying, I don't think a Japanese investment has ever actually been turned down in terms of a commercial one by FIRB restrictions. Certainly the restrictions themselves have changed, and it's important to stay on top of those. But in terms of restraining Japanese investment, I suspect it's probably doing the converse, and if anything, trying to attract more of it. So no, I don't see anything from a FIRB perspective that would be a constraint on Japanese business. Obviously, as things start to move in the defence space, that will get obviously closer scrutiny. But I think there are other parts of the world that are subject to closer scrutiny than Japan.
Ian, I might jump in on that very quickly. I think the Treasurer has sort of been quite vocal about some changes that are coming, some reforms to FIRB. And I think there are ways to speed up already approved customers, having a list, not customers, companies that have invested don't have to go through another process, for example. And I think, there's been bilateral trade agreements, economic partnership agreements have been negotiated that have given preferential treatment within FIRB rules. So it's probably due for a little bit of a refresh, given a lot of the policies over the last decade perhaps have been a bit reactive to changes. So I think that was flagged as something that might be announced before budget.
Question for Kataoka-san, whether you're expecting this sort of trend of Japanese companies buying startups to take that technology globally. Is that a strong theme that you're seeing from your clients?
Oh, yes, thank you for that question. Japanese big companies are, were rather reluctant to, how can I say, making partnerships with foreign startups. But nowadays, they realize that for their expansion, for their competitiveness, they need the, innovative technologies from outside. So they are really aggressive and active right now in searching foreign startups every corner of the world, not only in the US, China, Israel, or Europe, and also in Australia right now. So yes, I think they are very active, and we see the increase of Japanese investment or the partnership with the foreign startups.
Thank you very much. Maybe this one's for Shiro. Obviously, sort of in our contradictions in the Japanese economy, we mentioned Germany overtaking Japan as the third and fourth. But actually, if you could put that into context.
Yeah, and it's a recently Japan's gone into technical recession, and because of the weak yen, Germany's overtaken Japan to become the third largest economy, and Japan's the fourth largest. Now, we just had a change at the Bank of Japan too, with interest rates rising 10 basis points from negative 0.1 to 0 or positive 0.1. That'll likely continue gradually to tighten, to rise, and in which case you'd assume the yen will strengthen a bit over time against the US dollar. So if you just look at GDP and GDP per capita in yen, Japan's living standards and the size of the economy hasn't gone backwards, but it looks like it's going backwards in US dollar terms. So that actually relates to another question below as well, that relates to the weak yen. That is quite significant. Hasn't been this weak since 1990. And so that's a space to watch, definitely. But in fact, I've got a piece in the Financial Review tomorrow on this very issue. Japanese living standards can maintain at this level even if the GDP doesn't change, because the population's shrinking, of course.
And I guess one of the things about the weakening yen with overseas investments is the size and the financial capability of particularly the three large Japanese banks means that borrowings can be made in Australian dollars, which kind of provides more of a hedge. Where 15 years ago there was a lot of anxiety around exchange rates. So let's see, we've got here's another question: the real estate boom. Why is it different? Why is it different this time, Damien, from the 1980s?
Why is it different this time? Well, I guess for a start, we're not seeing quite as many golf courses and hotels. I think perhaps that the focus is more on long-term investment. I know the AJBCC is actually running a subcommittee panel discussion on April 23rd to look really at some of these issues, but certainly looking for longer-term investors. There's a story of growth here around communities and businesses, the BTR and the living sector space, some really interesting things that are very different from what were, I guess, quite speculative investments in things like tourism, ultimately. So quite different in context, and the number of entities that are now coming and getting involved in this, I think, will make sure it's a wave that continues to spread through across the real estate sectors in Australia. Really welcome development, I think.
There's a sort of a slightly tricky question there about how do we deal with China to promote economic security between Japan and Australia, and how is it going to affect the economic prosperity for both Japan and Australia, given, as the report sort of talks about, it's an unusual thing where your political system is not aligned with your economic. And China, sure, I'll throw to you. So it's your area of expertise.
Well, I think this is a difficult issue where Australia and Japan have to work more closely together with other partners in the region. We're both US allies, and we both have China as our largest trading partner. And that is a difficult thing to juggle, as the two are locked into zero-sum strategic competition. So our prosperity and our security is going to depend on how we manage those relationships. And for me, it's really appeal to and strengthening of that rules-based system through, as weak as it is and as problematic as it is, that's our defense against big powers. So I'm talking about WTO, I'm talking about all the things we've built on top of it, like CPTPP, RCEP. Yeah.
Question for Kataoka-san. We're always talking about high-speed rail or very high-speed rail. What's your feeling from the Japanese perspective? Is it something that we can have in Australia in the future?
Well, yes, but before talking about that, please let me comment on the China economic security issues. Because many Japanese companies are facing difficulties in doing business in China, but for them it's really difficult to get out of China because they have also their bases there. For those who are newly thinking of newly entering Chinese market, they are really how can I say reluctant to invest in China right now. But for those who have already bases in China, it's really difficult to get out of China. So in addition to that, the coming U.S. presidential election is a big concern for Japan and Japanese companies right now. So as was said before, we are really thinking of strengthening the ties between like-minded countries like Australia or European countries or Canada, etc. So this is huge concerns we are sharing right now. So sorry, your question is about what? I forgot.
Just it basically high-speed rail. A lot of talk about it. JR Tokai has sort of been active for a long time. Is it never going to be real?
Well, yes, because I don't know if you are aware of that, but the governor of Shizuoka has just resigned. He was, objected to the initial idea of, high-speed rail. So because of his, retirement, we can expect the acceleration of the project right now, but not in time for 2027. Of course, later than that, but yes.
We've got. I think there was one question about green steel production in Australia. Is that kind of realistic? I guess we have a history of not being able to sort of manufacture things very well. BHP and Rio Tinto have tried to do that in the past. The high smelt project and my old company Colby Steel had the Midrex process. Yeah, and I know that BHP and Rio are collaborating on potentially produce, whether it's green iron ore or green steel, but I think it's going to be a very small portion. The current supply chain is set up to export iron ore, so I think for to be good corporate citizens, they will need to apply some management and financial resources to it. Whether that's going to be a very large percentage, I think it's pretty small. I think we're probably getting pretty close to time. We did start late, so if you can indulge us for a couple of more minutes, I might just run through some predictions for 2024. As an old mergers and acquisitions lawyer, there's nothing I like more than record deals of M&A transactions, but we're already seeing in the first quarter, a lot of activity. Obviously, a record Renesas's bid for Altium software company, $9 billion, a record for Australia, Japan mergers and acquisitions. If it's approved, we've got J-Power and Genex, and when you think about it, usually takes 18 to 24 months for mergers and acquisitions transactions. The Japan-Australia visas were really only opened up in October 2022. So I'm kind of, we're expecting that the 2024 report will have quite a lot of more activity. There's been a lot of visits at obviously the senior level, as we've talked about at the political. That's just getting, as the world gets more uncertain, Japan and Australia are drawn together even tighter, and the geopolitical and the economic relationship just keeps doing positive circles. What we are seeing is a lot more visits on the ground in Australia from senior C-suite executives, chairman, presidents, COOs coming. And as we know, Japanese companies still like to see. They're not going to do online due diligence. They want to see, they want to meet the people, see the facilities. So I think that's a really, really good sign. The partnerships, it's been an incredible number. Of course, those partnerships progress to studies, to pilot plants, and hopefully to commercialization. So, they go from a partnership to kind of joint ventures and then investments with all the project funding. So we still think there'll be quite a lot of asset recycling. You're kind of seeing that from fossil fuels, but there's never been as much activity. Particularly the trading houses are scouring Australia for opportunities. If it's linked to decarbonisation or has an ESG theme to it, which means they can kind of harmonise that through their asset portfolio, that's so much better. We made a prediction, and I feel like Nostradamus, Shiro, said we think Japan is likely to kind of leverage its alignment with through the AUKUS, and within a couple of weeks, there's been this obviously announcement of the Pillar 2, but whether it becomes AUKUS plus J or JAUKUS or certainly a series. And Liz mentioned it, but this is quite a big thing for Mitsubishi Electric to directly contract with the Australian Department of Defence. All previous defence contracts have been country to country. So I think it's the harbinger of some opportunities for the Australians to go to Japan, and whether that's sort of cybersecurity or more defence related, soft rather than obviously hard assets. We didn't get a chance to talk a lot about it today, but if you get a chance to look at just what JBIC has contributed to Australia since 1951, 887 loans. It's and this is the Japanese taxpayers helping prosperity in Australia, and hence why we've coined this year's report Partners in Prosperity, and the financing provided by the big three banks, JBIC, JOGMEC, and Northern Chukin, with a sort of active presence here, and the mandates to expand from what was raw materials to now anything that's going to support Japanese prosperity. So it's a wonderful story, and also there's this opportunity. Decarbonisation is not yes, it's Japan and Australia, but actually the opportunities to kind of work together in third countries, whether that's the South Pacific or Southeast Asia. So I did want to just mention one person who's probably participating today, a close friend of mine, Takanori Ito, who has worked together with us on this report for probably the last 5 years. And TAC prepares the Japanese version of the report and does a fantastic job. And I'm embarrassed to say he often comes back with somewhere between 25 and 50 comments on how we could improve the English report, and 95% of the time he's right. So thank you to Takanori Ito. You've made the English report a lot better, and hence your Japanese version of it is also benefiting from your input. I think we've probably answered all the questions. We're probably appreciative if we've run over time. I'm sorry for that. And I might throw back to Christina, who is probably going to just close us out. But thank you to so many people to make time to hear, and hopefully there's a few insights today.
Thank you so much, Ian, and thank you so much for everyone who joined us today. We've reached the end of our webinar, and this is the first of a number of events that AJBCC will be holding in 2024. So we look forward to seeing you all again very soon. The next one is a real estate event that we've got on the 23rd of April. So we look forward to seeing many members for that event. Thank you very much, everyone.
Thank you.
Thank you.
Bye-bye.
Thank you.